Hey traders, this is Blake Morrow with Traders Summit. And with me once again, I have Beat, Nussbaumer of Macro Beat. Good to see you, Beat. It's been a while. It's been since January since we've talked.
Hi, Blake. Yeah, thanks for having me. To be honest, I was actually shocked when you mentioned it. I didn't feel
we were discussing whether we were, talking ahead of before the invasion of Ukraine, and it happened to be right as Russia was invading Ukraine, and we probably saw some downside pressure in the S&P. You were looking to be bullish the dollar, and look, I mean, it's all worked out, but probably not for the reasons that we all wanted, right?
Correct.
And now we have the dollar, which continues to be fairly strong, but there's a lot to discuss now, because now we've had, we've gotten past, our Fed meeting where the Fed actually raised rates. We're looking at the next meeting. We're looking at the ECB. We're looking at divergences and what other central banks are expecting to do and what the Fed's looking to do. So what is your prognosis right now of the currency market, where we stand? What's really on your radar?
Yeah, to be honest, I think the key, and we probably talked about this back in January as well, is it's a very selective world. It's like the easier, let's call them the easier dollars and the not so easy dollars.
Yeah.
We focus on dollar yen, which kind of had this crazy move to one. Actually, dollar yen hit the target about 3, 4, 5 months ahead of time with that quick rally to 125. Whether that was just fiscal year in Japan, whatever it was at the end. Fact is, we did print.
Yeah.
Dollar Swiss is obviously not working as well as I did hope, because I focus on dollar yen and dollar Swiss as the two central banks that are not going to hike rates in 2022 versus the Fed versus the ECB, versus all the rest that will hike rates. Now, obviously, we had the conflict with Ukraine, so the Swiss safe haven is back in force, which, funny enough, in the yen worked at first, like a nice move down in euro yen to like 124, and now look at it, 10 big figure higher, right? And actually, the war hasn't, things haven't actually improved. It's like, so it's a real headache. A few of the things that have been happening is a real headache, but because I focus more on the, like I said, the easier dollars, I wasn't that much in trouble. I refused to sell really Aussie because we knew the RBA, like last night again, the RBA is ultimately going to hike. Bank of Canada, we're talking 50 basis points next week. The whole ECB thing, I'm not too sure. I would still think sell euro dollar is still working. Maybe not like the most sexy trade on the planet, but I think with what's happening in Europe, the dependency on energy, the war is not going to be over for quite some time to come. I think the pressure in Europe on the economy is going to be a lot more severe than elsewhere, right?
So let me ask you this, Beat. What does the ECB do at this stage? Because we have this Russia invasion in Ukraine that's not going to, unfortunately, as much as we'd like to be optimistic that it something good is positive is going to happen, it doesn't feel that way. But the inflationary pressures that the Eurozone's starting to grapple with is really, does the ECB do something at the mercy of possibly weakening growth substantially? What are your thoughts with what the ECB might do moving forward?
To be honest, I really start to think that what we see is a sort of selection. We see it, in my opinion, a bit in sterling. If you look at how sterling suddenly gone from being, the Bank of England is nearly matching the Fed, so let's buy sterling. And sterling, if you look, it has been very subdued in the last many weeks. And I personally think it's because stagflation is really knocking on the door heavily in the UK. And I think it might well do so in Europe as well. So the central banks will have no other choice than to hike rates. But the market has become a little bit smarter than it has been in the past to go like, what? We hike, but we hike for all the wrong reasons. And I think this is what you see in FX. Euro is like under severe pressure, partially, obviously, for all the reasons we talked about. There's a new demon coming on the block, which no one has been talking about yet, is French election. The polls have suddenly shifted quite dramatically. No, I'm not going to call for a Le Pen win,
I was going to say, I was going to say, is that what you're thinking?
No, but
okay.
If you look, today we hit the highs in 10-year spread, 10-year French government bonds versus bunds.
Yeah.
Like from the sort of previous high. So there is a bit of stress or a bit of nerves going on in the fixed income market in France, which always is euro bearish also. So we suddenly have like, that's why I said the market is almost a bit overwhelmed by, we have really huge structures of stagflation or not. War in Europe that may or may not be World War III, whatever you want to call it.
Yeah.
Whatever it turns into, who knows? So it's a bit overwhelming. The one thing, and I don't really have a true answer rather than just pure speculation, is some of the carry moves we've seen in the last few weeks, that some of them make absolutely zero sense given where the world stands. It's almost like a fatigue of no carry. It's almost like fed up since 2008, having nothing to do. Now finally 10-year yields, in Australia, in the US and whatever, pick up. I mean, carry, not like as we knew it in the old days, but carry versus zero interest rates. So it's almost like if you look at dollar rand, if you look at dollar max, we have the most hawkish Fed in 20 years, and dollar max and dollar rand are going down, and the war in Europe, and so there is like this crazy world out there. And what I don't know, Blake, and this is what we sort of seen in the equity market, the way it came back, whether it's complacency, whether people go like it's going to be all right. I'm not sure what it is, or if it's just still enough capital out there which just go like, it's got to find its way
somewhere, right?
Yeah. So it's a very strange mix. I would say some of the moves you see out there make a lot of sense. Aussie higher up with the RBA kind of kicking in makes sense. Euro under pressure, war in Europe, dollar big, Fed definitely gonna outpace ECB by quite a margin. Makes sense. Sterling a bit caught in the middle between whatever. So a lot of things make sense. Some of the carry stuff, I'm really dubious about. I really struggle. And China is the biggest puzzle for me. Dollar CNH, not that I played a lot, but we had a massive move in net yield differential. If you look at the chart between Chinese rates and US rates, dollar CNH should be a lot higher. We had this whole property crisis in the back end of last year. We have PMIs dropping considerably below 50. We have all these COVID stuff going. So it is just a puzzle why China is looking actually quite poor. We're talking about 5% GDP. That's in China terms of bloody recession.
Yeah.
So really, what worries me right now, Blake, if I be really honest, and that's why I'm a little bit more nimble than usually, a bit more careful on the macro side, a bit more shorter term than macro. There's too much things not adding up for me on the macro side. Now, is this just because the market is overwhelmed, too many stories? I don't know. So I'm trying to figure out right now why certain things are as they are. And last but not least, we touched up on that, I think, back end of last year and early this year. New noises from Japan. I did write something today about jawboning foreign exchange.
Yeah.
First time in 25 years where the Japanese are on the other side of the story. Today, some MOF official or some, deputy official talked about this being a very hot topic, this yen weakness being a problem.
So do you think they get really vocal above 125 in dollar yen, maybe as we close in on 130?
Massive. To be honest, I looked at Kuroda this morning and got, okay, 122, 123 sends a signal. Then there was this MOF guy, really very strong, that almost like urgent. So when I look at Kuroda, I go like, okay, 123 warning, above 125, hey guys. And somewhere Esaki Gabara said, remember his name, was in the media last week.
Right.
Flash from the past, that towards 130, they're going to intervene. But we're not talking, I think we're talking about the usual Japanese, that just not official intervention, more these kind of, whatever.
Yeah.
Tell a few up there. Now, when I looked at some of the official comments, I would actually say this becomes more urgent sooner. So I think already north of 120, I would already be surprised if they start 125, 126, 127. just to put the brakes on, not official intervention. You will just see Japanese accounts maybe starting selling stuff. And the reason I wrote something about it today is the market is not educated about that. 75% of market participants have joined this market post-2008. They have no clue about 1990s. They have no clue about FX jawboning, about FX being a transmission mechanism for monetary policy, right? This is 90s stuff. So what excites me here, I'm telling you now, hopefully in prime, we might get some of the stuff back in FX that we all guys know from the 90s,
right,
and maybe early noughties, where there is this real problem on inflation. There's this real problem on the economy. It's a real problem of how quickly do we hike. And, oh, wait a minute. Oh, yeah, I remember. Foreign exchange. It's actually the fastest mechanism for policy, for monetary policy. So who knows if from back at your neighbor of competitive devaluation of the last 20 years, what if suddenly some start to figure out, you know what? Actually, we need a strong currency to help to control, because we're talking now about something that CPI could just go about anything.
Yeah.
Really, right? Especially with this situation in Europe with Russia and energy and whatever. I mean, it's a complete mess.
We were just having this discussion with our community of traders just earlier about, the weakness of the euro. It's just going to exasperate make worse the inflationary pressures as the euro becomes weaker. I mean, so you're exactly right. Let's just make Forex great again. How about that?
Yeah.
We make it great again.
To be honest, I really swear to God, my pulse rate gone up when I saw Mr. Saki Kabara.
Yeah.
Right. I know I'm nostalgic and it's
you're an old yen trader guy.
Yeah. But it reminded us exactly what I just tried to say. We talked about it already back end of last year, early this year, that there could be something like this in the making. I feel it's happened quicker than I expected it to happen, as in that suddenly there's so many moving parts out there.
Yeah.
And to be honest, if you probably speak to some of the central bankers, they're probably very worried. I mean, speak to the Germans or whatever. If you see bloody CPI at 7.5%.
Right. How about the Spaniards? How do they feel right now?
Right? So reality is, how this all pans out, if really everyone suddenly wants a stronger currency, is a different story. It's again going to be a selective story. Switzerland is going to be continuing happy to have. They already have a strong currency, far too strong one, so they remain on the weak side, right? Japan, look at yield curve control, while inflation is going to explode, rates globally going up, and they limit 10-year at 0.25. Come on, right? Yeah, they own the market, so they can achieve it. But what's going on is it's crazy.
And that's and the greatest thing about it is that it's going to just create massive amounts of volatility for us traders. So
big time.
This is where I've had a lot of conversations with a lot of traders in recent months, and this is where you have to be more sensitive now than ever. For the Trader Summit community, you got to be more sensitive than ever about your position sizing, where your stops are at, how you're managing your trades, because it's not like a range bound environment that we've been seeing for the last, how many years, Beat. I mean, Eurovol has been like in the toilet for the last 5 years or so. So this is the time where things really start picking up, where you need to really be more actively managing those positions that you're taking. So before I let you go, let me ask you, I know you're a little defensive right now, trying to figure out what's what, but what would be the number one currency on your radar right now at this moment?
To be honest, we just have to stick to the dollar story for now. So I'm not giving up on the dollar story, but the dollar yen is not prime focus anymore. I'm trying to find the euro dollar, the dollar Swiss, some of these more, other dollars, because I think dollar yen is becoming complicated. We had a huge move. But you can't, the rest is probably, the rest, to be honest, the Swiss franc ultimately is going to work. The only thing I feel there, I just have delay for 3 to 6 months, as in, because if you have two-year US at 250, and you have like, 2-year or 3-year Aussie at 250, Swiss franc where it is just makes absolutely 0 sense. So that Swiss outflow will happen. It's delayed due to Ukraine. Now, if I say the war goes on another 6 months, yeah, it will, but the war will change shape. And at some point, people just go, okay, yeah, we know about it, right?
Right. And that's kind of, I look at the euro right now, and I know we're trading around the 109 handle. But we're bouncing around. But I would have really thought the euro would be much lower than it is, but it's held up relatively well considering. Wouldn't you agree?
The euro is the euro, right? It's just such an animal to be honest, since its inception, it's always undershot on the way down. If it should have gone lower, it never did. So I reckon we go maybe 105, 104. We're not going to go parity. I think what I do right now, and this is an indirect dollar play, I'm looking to sell rallies in Swiss yen.
Okay.
And well, the idea is really the dollar yen having done the move. Dollar Swiss, I reckon, will still go above parity once this Ukraine thing is losing up a little bit. That move is just in store. And rather than just banking on the dollar, which has its moment, I think actually selling Swiss yen. So the euro yen done most of it, or if it even continues, at some point Euro Swiss is going to take over. Or if everything goes belly up, Euro yen is going to tank. So with the Swiss yen position, you actually have two options rather than just, if you buy dollar Swiss, you have to be right.
Yeah, right.
You sell Swiss yen, you have two, because you can get the Swiss or the yen move or both. So it's a bit of a smarter play. Sounds not so exciting, but if you look at the move and think about the story and think about what has already moved and what should still move, I think it's a 10% trade over 6 months or something like that.
Well, there you go. That's a great idea from Beat. So Beat, as a trader, how do I find out more about you and what you do?
To be honest, you can hit me up on macrobeat.co.uk. The website is not like it's just a sort of business card type website. You see who I am, what I do. You have a link to how you can contact me, either, look into the sort of research I write, the products I have, the education I have. So really, I do, I'm managing money, I'm training traders, and I'm running a sort of research portal where I help, again, traders to hopefully figure it out. Story.
Right? Just trying to
website, there's a link there. Happy to offer a free trial to anyone for a week just to see what I'm doing and then be them to judge of it.
Well, Beat, it's always good catching up with you. I love talking FX with you and the markets and ideas. So guys and gals, if you're watching Beat at home, make sure you give them a thumbs up. You're watching them on YouTube. That's telling them that you really enjoy the content. Make sure you subscribe to the channel so you don't miss any of our great content. And if you're watching this, we are filming on today is the 5th of April. We have our big annual event that's happening this weekend. So make sure you register for that. It is free. So Beat, thanks for joining in today. And thanks for
so much for having me, Blake.
Yeah. Thanks for being, it's been way too long. January is way too long, of a span. Sure. Let's catch up quicker than that next time around.
Perfect. Thank you so much.
Have a great day.
Thank you, Blake. See you.
Thank
Bye-bye.
you. Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.